Should we buy or sell the Verisk stock? First off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So I have a theme under the megatrends called high-tech finance. So Verisk Analytics is in the risk analysis business, 30% from the 52-week low and a 12% pullback. Here is the company's website. Empower Better Tomorrows. Verisk provides expert data-driven analytic insights that help business, people, and societies become stronger, more resilient, and sustainable. Yeah, so it's all about risk assessment. So here's a bunch of articles. Yeah, so let's just look at the chart. So these are weekly data points, very much big picture, and clearly the stock has been in a primary uptrend, but there's a but. As of late, we have seen a pattern that is very rounding top-ish. So the bears are in control because we do have lower highs and lower lows, which is the very definition of a downtrend. Looking at the daily data points, so we have been able to reclaim the 200 daily moving average here in red, which is good. So let's investigate a bit further. So looking at the weeklies here, RSI and the PPOs, there could be more fuel left in this rally. We see that this counter trend rally, it did actually fail at the current levels, but this previous high, but that was during the primary uptrend. When it was strong, then we did see higher RSI and PPOs. So the context is, however, rather different. Now, looking at MACD, RSI, and PPOs, we are frankly in a bit of a dangerous territory. The previous times we had similar readings was during this move here, a major counter trend rally. Then we did see a very substantial pullback. So the current RSI levels, historically, dangerous. Same thing with PPO and also the MACD. The MACD is not like an oversold, overbought indicator, but you can also use it in that way to sort of find whether there's a trend when it comes to high or low readings. But anyway, current setup, it is actually a bit dangerous here for the bulls. So I write RSI and PPO overbought, the J just R, and this is especially here on the daily data points. So I do give the bears a -3 here on the technicals. The bulls have certainly gotten themselves into a situation which it is potentially a bit dangerous. So here is the seasonality. So to the right here, we got the average data over various time frames. The last 5 years in green, 7 years in blue, and 10 years in red. We do see that leading into first-ish of September, that is when we tend to see seasonal weakness from Verisk. To the left here, over the last 5 years, August is actually a bit of a strong month, but September and October are some of the weakest months. The last 10 years, July is very strong, but we are not in July anymore. We are in August. August is 50-50, but September is the second weakest month. Then we go big picture. We look at the last 14 years. And it is pretty clear. The data is right here in front of us. August is a bit 50-50-ish, but September is the second weakest month for this stock. So I do give the bulls some benefit from the fact that August is not an outright bad month. We are still in August. The problem, though, is that September is one of the weakest months. If I was a bull, I would definitively consider closing out some of my positions heading into September. September is simply a weak month, one of the weakest. That is going to affect quite a few investors. So let's look at the fundamentals. So here is Sachs. They have a number to buy here on Verisk. D value, D growth, D momentum. So the style scores, they are rather mediocre. There's not really much value here, not much growth. not really a good time either for the bulls. Industry rank bottom 37%, business information services. I do think this is more specifically in the finance-ish sector, but the market cap is 32 billion US dollars. There actually is a bit of a yield, 0.61%, so you get at least a bit. Okay, so what are the insiders doing? Well, they are... Well, at least in August, there was a bit of a change. So here you can see in July, you see a bunch of buy. So they were buying actively in July, but here comes August, and all of a sudden we see sell. So the insiders might be thinking that it's getting a bit richly valued. Okay, so let's look at the consensus estimates. So we do have 15 analysts actually covering this stock. The average price target is 1% to the upside. That is not... It basically means that they think that the stock is fairly valued. The highest target is 13% above, but the lowest is actually almost 19% below us. So I give the bears a -5 here on the fundamentals. We do see that the style scores especially were very mediocre. Nothing really to entice those who look at fundamentals to buy the stock. Insiders also some issues, and the price targets were basically saying that at this price, Verisk Analytics is fairly valued. So yeah, that's the fundamentals. Let's look at relative performance. So long term, we do have a 81% positive correlation with the S&P 500, 60% with XLF, which is the financial services ETF, then 55% with the fintech ETF FinX, then minus 39% with the dollar index. Daily data points, 83% with the S&P 500, 68% here with financial services, and 75% here with FinX, minus 49% here with the dollar index. So what happens with the S&P 500 is going to have the biggest effect here on this stock. So I did look at the S&P 500 in the video about Israel. So to quickly sum up, the S&P is just in a messy situation because we have seen a counter-trend rally that has been strong. Then again, we are getting into some risky territory on the RSI and PPO, meaning these are levels that have triggered previous pullbacks. We also have this red 200 daily moving average here, which has been very good for the bears in the very recent past. They will be attracted to that one again. Another thing is that because we have seen pullbacks, major pullbacks, frankly, from a rejection at that moving average, it means that those who are sitting on profits now from bullish trades, if we see any kind of rejection on the 200-day daily moving average, the bulls will also be selling. So you will have bears selling, putting on short positions, and then you will have bulls selling, in order to close out some gains. That is selling pressure. So here is Verisk against the S&P 500. So in this case, there used to be some very clean time cycles. So let's draw them in. So these were very nice and clean. These time cycles, they kind of still matter in a sense, but you see that the current rising phase has been very jagged. Very unlike what we have seen in the past here. The major phase is a declining phase here, which means that Verisk could underperform the S&P 500. But then again, we have seen that there's been a bit of a break here in these major time cycles. Okay, so let's look at the seasonality here for the pair, like that. Yeah, the seasonality is definitively not favorable to Verisk. Leading into 15th of September, Verisk usually significantly underperform the S&P 500. So we do end up with a -3 here on relative performance and a -3.3 overall. The key signal is that RSI and PPOs on the daily data points, they are overbought. Another thing is that we do have a major rounding top pattern that's formed on this stock. So yeah, overall, this is more favorable to the bears than the bulls. So we have some time left here, so let's look at some of the other stocks in this theme. So one of them would be Fiserv. Let's start here with the weekly data points. So Fiserv, it is doing something potentially interesting. We do have this potential breakout above these levels. The issue with this breakout is that we have already seen a very strong rally. So when you have a breakout, a potential breakout, then you have to look at the past, to gauge whether breakouts are viable or not. So here is one of the prior times where we had a breakout for Fiserv. That is here. So in this case, around here. Well, you could actually even argue here, frankly. I guarantee you that at this level, you had a bunch of people who talked about breakouts. Then you did actually see a bit of a pullback, a 5% pullback, but then you did later get that breakout. So the previous times we had a breakout setup, we did see initially a bit of a pullback. Yeah, maybe this as well. So in this case, you could argue that we also had a bit of a breakout. Here you got a bit higher, but then we did actually see some pullback. So from that level until we made a clear new high, it almost took a month. Then we go significantly lower, then we give a bunch of it back. Here is another situation where we had a breakout for Fiserv. In this case, you had a very strong breakout, but unless you got in very early, you would just experience the pullback. So we did actually go back here to test the breakout level for almost, approaching 2 months, frankly, until we really started to climb higher. Here is another interesting example. So in this case, so here approximately we did get a substantial breakout very quickly though, and then we did actually pull back. So this is a thing to just be aware of when it comes to breakouts, is that it's very common for there to be pullbacks before the major breakouts, or you could have a breakout but then a pullback right after that. There's many reasons for this. One of them is just basic psychology. Those people who got in early, so let's measure. Those people who got in around here, they are sitting at a 25% gain. That's a pretty substantial gain. So the most professional of those investors will have stops, trailing stops and the likes, which means that they will of course benefit from a bit of a breakout, but when there's a pullback, they will add selling pressure because they are very incentivized to tighten their stops, because the earlier you get in, the bigger the percentage gain becomes. That's the magic of percentages. The problem is that if you are a breakout investor, you don't get any of the gains from the lows. You literally start here and you get like, just to get up here, you would have like a 2% gain, while the bottom fisher, he will have at the same level as you, he will have, let's say, yeah, almost approaching 28% gain. That's a very big difference. So the early bird will have a lot more to lose than you. Another thing is that the early bird has a very good buffer. So if they see that the breakout could fail, they will add selling pressure, even though they are bulls. Because a pullback for them becomes much more dire than it is for you, because see, at this level, 27.69%, if we were to pull back just here, all of a sudden that gain is dwindled to 25%. And if we pull back here, 22. So they start to lose percentages very fast, while you would have like, at this level here, you would have just a 2% loss, but they would lose percentage-wise more. And given that, as we saw when we did a bit of a quick historical analysis of breakouts for Fiserv, they could become messy. That's the issue here. So definitively, yeah, do always a bit of a historical analysis on the signal you intend to trade, because it differs so widely across securities. To get more data, just go to diamondarm.com.